Good morning, everyone. And here we are once again, SPX daily plan and roadmap, and quick review of yesterday and where we are today. I thought yesterday was kind of a interesting day in that, okay, we opened pretty close to a local high, almost, I guess, what was it, 6390-ish. In the overnight session, we tickled 6400. And good morning, wanted. And we soon, we chopped around the 80 area. I think I had 70 or 75 as an inflection point right here. And by 10 a.m., it didn't take long for us to tank. Now, I don't know if the unemployment numbers were that bad, what was going on. Um, to me, it just seemed like an outside reaction, but what do I know? What also caught my attention was VIX, and I keep harping on VIX as kind of like a down and dirty indicator uh, of direction intraday. And yesterday, VIX opened just a tad, right around 16, give or take, for government work. And pretty much out the gate, even when we were kind of, we went up and stalled, we crossed that 1650 level that I keep harping about. And and we just, spiked all the way up. I forget the percent. I have it in my note, whatever it is, 10%, whatever the number is. And then kind of pulled back when we went back up to this 60, a little bit above the 1650-ish level, which has kind of been a little tail level. Now, VVIX, I've been looking at VIX VVIX relationships, and VVIX, yeah, it spiked a little bit, but percentage wise and just the way it moved, and I did a little look at at some of the historical data. VVIX kind of showed a lackluster response, indicating to me that it was more short-term hedging, market maker. Market participants adjustments and OPEX related stuff. OPEX is coming in rather than a sustained future demand like VVIX is going up and we're in for another leg down. Anyway, that was my interpretation. Whether I'm correct or not, we'll see. But that's kind of my take on what happened. Now, getting back to my take on what happened, I think this is interesting. Then we'll move on. Okay, so we sliced like a hot knife through butter, through these are today's levels, not yesterday's levels, but they were similar. We sliced through all those numbers. Um, Wherever we had some market maker longs, to act kind of as support or inflection points, they barely held. Once we went below this 70-ish area, we had a little stall right around 50, as you can see here, where we're supposed to near the round number, and went up to 60. And then once that got rejected again, all the way down. Now, as VIX is increasing, we know that, or as volatility is increasing more accurately, we know that um, the distribution of deltas widens, and what that means for normal people who are on quantity geeks is that the market maker positive gamma support levels widen and basically are at risk of breaking. And that's what happened. We had levels all the way down, and we kind of slammed through them. Um, and came all the way down to, and this is instructive for future reference too. We went all the way down almost to the penny, to the 6310, which was a large area. Those trades came in around 10:30 in the morning. I'm not sure exactly when. We have somebody in our trading room that updates us on intraday flow using options depth, and we saw these big trades come in. It was after the market was already going down. We bounced on it almost to the penny. We stalled and started going up. Now, this was at the end of the day. Why is that important? I'll tell you why. Funny you should ask. Okay, so these are short puts, which in the Delta world doesn't matter if they're short puts or long calls. They're customer long Delta, market maker short Delta. And so market makers are long these are long gamma here. So what happens? We go down to here. Let's just say the delta is more or less 50. It's at the money. But we don't have a lot of time left in the day. It's 2:15. So as we move away, the delta goes from, let's just say, 50 to 60, and we can't hit it again. The deltas are kind of hanging around. And then as we get toward the end of the day, 3:15, we're getting to power hour, those deltas start to increase at a quicker exponential rate because of gamma. Gamma, the rate of change of delta as a function of time and nearness to the money. So time is running out, so the gamma, the change in delta, the rate of change of delta increases, more convexity. So market makers have to buy back more and more to compensate for this as these deltas. Think of it as becoming an in the money call because that's what it becomes. And the market makers are hedging that out fast and furious right into that 40 level. Now, I don't remember offhand, but I'm going to guess there was something at 50 that kind of slammed us down. I don't remember, and it doesn't really matter to look back. So I think that's instructive, and that can happen from above too. If there's a market maker, large market maker, long or short strike above, especially toward the end of the day, you get the resultant hedging because of charm flows. I hope I'm clear enough. In my Discord, in my trading room, on my Substack, we talk about this a lot and we try to go through more detail to help people understand it. Some people have different levels of familiarity with it, from people who are more in the weeds than I am on the quantity stuff to people who are futures traders and really just kind of want to know where the lines are that might help them with their whatever other things they use to trade futures. So what we have today is a very different profile than we've been having. Up until a couple of weeks ago, a week ago, we had basically market maker long gamma all around. So sold options, puts and calls. And the market maker hedging has been to suppress volatility. Moves have been smaller, more muted, kind of grinding, whether it's up or down, but generally grinding up. Started to change a little bit last week with the Thursday and Friday, whatever it was. I guess it was a non-farm payroll, whatever it was. The FOMC non-farm payroll, whatever. That kind of started the regime shift somewhat. And maybe we're having a regime shift. I'm not sure. We're gonna figure that out together. All right. So now let's go take a look at the mess we got going on here today. Now let's look at this. What a mess. Okay. So 50. We're more or less right here. And there's 1,400 contracts there. That's a decent size. Not great, but decent enough. We had plenty of those like that yesterday that broke. And we have a little bit more here at 70. And so And that's kind of where we stalled out in the pre-market just before. And so here's your first little zone. We should bounce between these two zones with market maker long, market maker short, customer long, target over here, 65. Now, what do we see? All these lines to the left, market maker short versus market maker long. So we have a lot of potential paths acceleration this way or that way without much support, stall level, etc. Good morning, Boomer. Without much stall level support. So basically, moves will likely be amplified today, especially once we get below 50. Take a look at this shit. Pardon my French. Once we get below 50, we got a tiny prayer at 40, like, OMG, please help me if you're a bull. And once we get below 40, there's a quick ramp all the way down to 6,300 and not much there either. So I'm not saying this is going to happen, but breaking 50, 40 could get nasty down to 25 big level, et cetera, all the way down a little bit at 85, a little bit at 70, and we have big stuff at 62.40. Again, I'm not saying we're going to get there because the opposite side of that story is decay. These market makers short options, as time passes, lose their deltas, decay, just like if you ever had a long option, time passes, it decays, it moves away from you, it decays faster, the deltas recede, and so that results in market makers releasing their hedges, and if they're puts, then they're buying back whatever short hedges they have, and we have this big cluster from 25 to 63.10. Let's take a quick peek at what those deltas are. 63.12, 10, 12 delta, now I'm up 63.25, big one. Big line, 19 delta, 20 delta, important, sensitive to volatility, kind of the most volatility sensitive one. Some say 22, some say 25, some say 20. IMHO, it doesn't really, it's not like rocket science where it has to be to the millimeter, to like the third decimal place. This zone 19 is pretty sensitive to volatility. So if we have volatility go up, market makers are going to increase their hedging and their selling in order to neutralize this. And we have more of it below. Let's look on top. Okay, 80, 85. So here's our 20 delta if volatility goes down, which I don't expect it to do. But if it does, this area comes into play. Now we have, let's get back to the chart. Let's get back to this. Where is it? Now we have this long gamma, long customer long market maker, short gamma magnet up here, but those are low deltas. And so for now, we can take a quick look at IWM, sure. I actually have an IWM trader on myself, so we can take a look at it. I don't have as granular information on IWM as I have on SPX, but we can make some assumptions. So yes, we can. So right now, these aren't much. However, if we get up here to 90, if we can get past this 80 and kind of get into this zone, what's this zone, 70 to 90 with something in the middle, then these start to have some pull and we can get into this chop zone here. And of course, if we get over 95, Then we have another acceleration zone all the way up to 2035. I'm not saying it's going to happen, but if over 95, then potential acceleration, stall around 1520, continue, stall near 30, 35 below this level. If below, if between 70 and 95, chop with a target of around 80. Okay, where we are now, 50 is our main inflection point. Everything flips, the script flips below 50. If we go below 50, all right, 40, you have a prayer. Maybe if this is magnetic enough to pull us back up, we might hang out here. But if below 50 and VIX is going up, then first target is 25. The expected move is around 27-ish, I think, whatever it is, 27.30. We can check again. So that's certainly within the expected move. And that expected move seems to me a tad muted considering. So at 6,300, where one would expect to see something, there's really not much there. A little bit. Now that's looking at the 0 DTE. Looking at the whole complex, because market makers don't have to hedge just 0 DTE, it's basically the same picture, similar picture. Let's go to a close-up view of this. And this is a mess. This is what my old mentor used to call, if you look at a candle chart, a frog in a blender pattern. Red, green, long, short, up, down, chop city. That's what this is. So red is your hedging in that direction. Target, this looks kind of like where we're going to head, especially if this doesn't hold over here on 50.55. That's your key inflection point. Watch for that. I might take a speculative little fly or something right before the open. As a matter of fact, I'll put it in a minute. Looking for that. And now if we can get up here, we have some target up here around 80. And of course, if we can get over here, then we have like these targets all the way up here. Some days the map is easier to read than others, or path is more defined. Today's not that day. Let's take a quick look at charm, and that's mostly going to kick in at the end of the day. And we have these pin zones, somewhere wide zone, some 62 over 62.40, and these will decay up, sending us, maybe we break 6,300 for the first time in a while. I think we had a low at 62.80, I think, ish last week, or maybe this week on Monday. Maybe this week on Monday after last Friday's sell-off. Last week's sell-off brought us down towards 62 something, toward the low 62, so it hasn't been that long. And we have this main zone over here, 50, 40, and going up, up, up. One more thing to look at. Well, a lot of things to look at. One more thing that we have time to look at. Okay, and this is number of contracts, cold-blooded. This is what they got. So now you don't have a visual chart showing you patterns, and maybe some of you are better with a visual chart. Now you have the numbers, just the facts, just the facts. And so you could see over 50. Okay, I don't know how well you could see. Over 50, we have, um, here's we have almost 1,500 contracts over here at 50. So that's kind of support. All this path up toward here at 65.70, you have the stall kind of where we stalled. Over 70, you see, kind of just look at the colors and the pattern, maybe to 80 and then stall out. And here you have some green. Here's the stop at 95. Over 95, you see the red. That's market maker short. That's pulling you up. So here's this chop, 50 to 70. However, below 50, you have this tiny little thing at 40, and you have this red pathway down to 25 over here. 6,300. We start to stall out. Nothing really much there. And look at this, below 70, 6,250. Somebody's sitting there setting an ambush. I remember them when the trade came in at the end of the day. Somebody's sitting there putting in an ambush right here at 6,250. Did they throw the money out? Maybe. And below this, 6,240. I remember when these came in. And so if I can get premium down here, I'll take it. And so with that said, let's take a quick peek. Actually, before we do that, I'm going to take a quick look at IWM and then we'll come back to it if there's more time. Because I have one or two IWM trades on myself. I have a call fly and a short put. And I think I might put on a strangle on top of that. Okay, so here's IWM. This is Gamma Edge, and we'll look at Mentor Q in a minute. Okay, so 230 is where the big call open interest is. We have puts up there. I'm not sure if these are long or short up here. Of course, that's going to matter. But we know that we have a possible path up to 25 and 30 would be where we would kind of die out depending on our time frame. Right now we're right about 20 and below 20 we have this 215 level which kind of becomes a magnet, and then 210 is where we should stall or bounce. Let's look at that this way. Okay, so if you look at this way, you can kind of see the picture. If we don't get over here and then over this 23 to get on our horse, then we get sucked into this 218, 217, 212.5, etc. Now also remember though, like I said before, these can decay and be a fuel up or a magnet down. Let's take a look at one more thing. Now I'm going to go to Mentor Q. Now let's see what IWM looks like here real quick, see where the levels are. So it shows a similar picture. Gonna kind of be hard to get over 220, 225, kind of right where we stalled. We stalled right at this gamma level recently. Before that, we got to 25. So I would think your first path is over 20 to 25 if you're a bull. If we break below this 218 level, we would hope to find support here. And we're kind of in a gamma no man's land, with 220 being our main inflection point. Does that help? And what were you thinking? Oh, one other thing anecdotally. I read, I don't remember what report, maybe a Goldman Sachs report or an Amora report somewhere, that net short in IWM is pretty high. So that could, again, be a tailwind or a headwind. Also, the other day, after this IWM pop recently, institutions apparently rolled their hedges down and out, but increased the size. So don't quote me, I might have the numbers wrong. They rolled their end of August 208 puts, 20,000 contracts, down to September 205 puts, 40,000 contracts. So collars and selling calls on top of call spreads on top of it. So there's collar trades in, kind of capping the top, hedging the bottom, net short in IWM. That said, as a contrarian, I kind of like having that fuel. And we know that, I think we know that any kind of inflation rates, good news, Fed appointment, good news, whatever, could be a potential tailwind. Okay, so does that kind of more or less coincide with what you've been hearing, what you're thinking? Yeah, feel the heat of the tariffs first and feel the cooling when something comes off with the tariffs or rates also. So it's kind of, they're like in the crosshairs, in the crosshairs. Okay, where were we? All right, now let's see where SPX is again. Okay, I'm gonna try and actually get off in a timely manner today. QRS SPX. All right, we're still managing to hang out. We'll leave that stuff on there too. That's too noisy for my nerves. So we can leave it on. We can pretend it's not so noisy. So you can see where we are. So down here they show that whole cluster of negative gamma, a market maker negative gamma down here as kind of our magnet. I'm not sure why you would call what you would call this, and why 6,300 is really nothing at 6,300. But anyway, so what would I do today for a trade? Well, first thing's going to depend on what VIX does. And we could go both ways. We often go both ways through these zones. We can often travel through all three zones and end up in the middle of one, the bottom one, the top one. It's all path dependent, the hedging. If we go up, the hedging is this. If we go down, the hedging is that. If VIX spikes and we go down, the hedging is this plus that. So it's all path dependent. It's not a simple linear. Okay. So first thing, we have that 25 magnet and 40 where it would break. So to me, if I can get a cheapie, we're heading toward 25. So Maybe something like this. How cheap is that? A 10 wide. 55 cents, that's a bargain. So I'm putting this in right now, sight unseen. If it fills, it fills. If not, I'll go back and take a peek. If we break below 50, 55, then this thing should do pretty well. Now you could play with the widths. You could break the wing this way. It's not a bad idea either. Or you could break it that way. However you want to do it. You could double up on contract size, whatever. I'm just playing it. I'm just keeping it simple. To the top side. See, they don't have a lot of juice. Today's a shitty day. I'm sorry. Pardon my French. I don't see anything I really like off rip. 64.10, 25 cents. That sucks. But I'm going to put in 45 cents if I could get it by a miracle. 62.40 is nice, but again, there's no juice there. So where else might I consider going on the put side? Below 70. I mean, this is just ugly. We have this stuff here. So this might be enough to slow it down. And plus, it's just far away. 62.70, nothing. I don't like anything. Maybe a day maybe it's a beach day. I don't know. A scalp day. I'll do the same crazy thing. I'll put this in for 45 cents and see what happens. But until I see the whites of their eyes, now another way that I might approach it, not saying I will, but I might, on a tight spread, and again, there's not enough juice. Let's try the old. I don't see anything. Yeah. Yesterday was rough, and today doesn't look much better. I mean, my default is that we go down, so I'll probably be a little more aggressive on the calls. 0520. Come on, give me 40 cents. Give me 40 cents. Don't be so cheap. Now, this whole thing can turn around, but I don't expect it to. Now, I want to show you something else. Here's the expected move Friday to Friday. As of right now, remember last week we dumped? As of right now, we exceeded the expected move. That doesn't look right. Something doesn't look right here. 63.56. It's not showing the close. I guess I have my candle set weird. We closed right below the expected move. We closed down here. Here we are. We closed down here. So based on last Friday's expected move to this Friday, now we tend to respect those Friday to Friday. What one would expect us to close somewhere down here, certainly not up here. Expect. And that's basically it. Any questions, comments? like, retweet, whatever it is you do in YouTube. Share, right? Share. I think sharing YouTube videos helps. Whatever, and spread the word. If you found this helpful, spread the word so other people can find it helpful. If you didn't, that's fine. I'm not thin skinned. Tell me in the comments why you think it sucked or what you think I could improve. It's all good. All right, guys. Today just doesn't look great for iron condors. Looks more like a scalping day. All right. Take care, everybody.